Well, we've got a lot of interstate news, and all of it is good so far this week, y'all. We have seen nice improvements in rates. In fact, you have to go all the way back to, October the 4th of last year. We're 10 months back to find rates as low as they are today. So we're going to dive right into the numbers. This is all fallout, folks, from the non-farm payroll report that came out last Friday. That was a strong miss to the downside with huge revisions. We're going to talk about that more in a moment. But right now, national average, according to Mortgage News Daily, is 6.55%. 1 week ago, we were at 6.75 in that same survey. 30 days ago, we were at 6.79. Y'all, we were as high as 6.85 this month, back on the 15th of July. So a little over 2 weeks ago, we had rates, or 3 weeks ago rather, we had rates a third of a point higher than they are today. The difference, and some folks have asked me to look at these numbers. They like it when I give numbers and examples. If you had bought a house 3 weeks ago and closed on it on rates that were prevalent then, you gave up $12,000 in purchasing power. So another way to look at that is that mortgage is $80 a month cheaper for the same $400,000 a month or $400,000 mortgage today versus where it would have been 3 weeks ago. So it doesn't take a lot of movement to make a significant difference in affordability, y'all. 12 grand is a big pop in affordability. Folks can buy a $415,000 house today for what they would have paid for a $400,000 house 3 weeks ago. So want to see that trend continue. This is all still fallout, as we mentioned, from the much weaker than expected BLS jobs report. Of course, since the last video that I did on this topic, we've seen the Trump administration fire the head of the BLS. Y'all, I am 100% in support of that. I think when your job is to get accurate numbers out and you have a 250,000 job revision to the prior 2 months reporting, and you look back to 2024, and we had over 1.1 million jobs revised downward from the numbers for the entire year of calendar 2024. Change needed to be made, y'all. If you can't get more accurate than that, then what's your job? So that was a coach that needed to be fired, in my view. CME FedWatch tool. What does this mean for the future of interest rates? Well, here's how the Fed futures are trading, y'all. There is now a 91% chance of a quarter point cut on the September 17th meeting. There is a 49% chance of a 3/4 point cut between now and the December 10th meeting. So that's a big deal, y'all. We haven't seen that much priced in for a 3/4 point drop this year, but we are now. And there's a 67% chance of a 1 point drop between now and the January 28th meeting. So y'all, the markets, on the weakness of this BLS report and on several statements from Fed members, voting members, about where they're going to be in the future, the markets are really bracing for a significant cut over the next 4 months. So we're going to wait and see if that happens, y'all. It's good news. Glad to see it. Wish it had happened 3 months ago. Very frustrating, y'all, that these BLS revisions cause people to pay more than they should have for their house. It is not unfair to say that rates would have been a third of a point lower 2 months ago had the BLS done their job correctly and given us reality around where the labor market was. So it's very frustrating that we've gone longer than we should have with the rates where they've been, but I'm glad to see a downward trend now, and as always, I'm going to keep you up to date on it. We're always on top of the market. I nerd out and geek out on these numbers, and we're always blessed to have your referrals. So stay blessed, stay safe. We will talk to you next week.